The Berkshire Hathaway boss, Warren Buffett, is known for his proven winning strategy that has resulted in him becoming one of the richest men on earth. The finance kingpin does not simply make investments and then sit passively, expecting to turn a fortune on its own. He is constantly shifting his positions in various assets, and strategically adjusting his stakes, based on a rigorous assessment of individual stocks, as well as wider market and economic trends. Following the Buffett strategy has been one that many investors in the market, amateur and institutional, have tried to replicate. This is especially true in the present, when market uncertainty and a bearish sentiment seemingly dominate all financial sectors. Market participants are increasingly turning to the market shock, and are aiming for a win by taking inspiration from some of his investments. In this video, we take a look at 5 top Buffett stocks that are optimal for those seeking to win big. We go through the core strengths of these stocks that motivated Warren Buffett to bet big on these names. To start off our list, we begin with Ally Financial, a mortgage and auto financing company that trades by the ticker ALLY. During the second quarter of the year, Warren Buffett more than tripled his stake in the company, pushing it up to 9.7% ownership. One of the core attractions of the stock is the value it offers, at its incredibly cheap price. The company's cumulative income over the last 3 years totals $5.9 billion, which makes its present market capitalization of $7.8 billion extremely cheap. This is a major reason for Buffett's interest in ALLY, who has always championed the philosophy of value investing. A reason for this significant undervaluation is the anticipation of a recession on Ally Financial, and the wider banking sector as a whole. The stock is down over 51% in the last 12 months. However, there is a strong indication that these fears are largely unwarranted. External indicators such as stable unemployment rates point to this. Similarly, Ally has been adjusting its underwriting to pricing changes, which would ensure profitability even in an economic slowdown. Its low price has its dividend yield at an impressive 4.4%, which is extremely attractive. Ally has consistently been overachieving in earnings since 2017. In its last annual report, the company saw its total revenue climb from $6.2 billion to $8.7 billion. It also managed to triple its net income from $1 billion to $3 billion in just 12 months. Although, even Warren Buffett expects macro headwinds to impact immediate performance, the long-term value inherent to ALLY, at its low price, is too compelling to ignore. The second stock on our list we take a look at is the gaming industry's champion, and creator of the wildly popular Call of Duty franchise, Activision Blizzard, which trades by ATVI. Warren Buffett had spent over $1 billion purchasing ATVI stock earlier this year, upping his ownership in the company to almost $5.3 billion. The stock is in the spotlight given an acquisition deal with Microsoft Incorporated, looking for a $69 billion buyout, valuing ATVI stock at $95 per share. At present, the stock is trading in the market at $72 per share, implying an almost 25% upside. The news comes as highly positive to shareholders, considering the top and bottom line slowdown this year of -28% and -68% respectively. The deal is one of the largest of its kind throughout the history of the industry. This size of the deal has also drawn the attention of regulators and antitrust commissions, who are investigating the market implications of the deal. However, both parties remain highly confident about the deal, as these investigations hold no indisputable grounds for breaching antitrust laws. Taking all these factors into consideration, makes Activision a highly rewarding investment that holds significant upside potential and quite a low risk level. The opportunity is one of a kind in the entire market, which the investment kingpin Warren Buffett has clearly recognized. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Number 3 on our list is Chevron Corporation, the American oil giant which trades by the ticker CVX. The company seems to be among Warren Buffett's favorites as of late. He first invested in 2020, and has strategically been upping his stake ever since. This year, he more than tripled his CVX holdings in the wake of oil price surges caused by Russia's invasion of Ukraine. Given these circumstances, CVX at present stands as this year's top Dow Jones Performer of the Year, climbing 47% since the start of the year. In comparison, the second best performer climbed by 21%, whereas the index as a whole fell by almost 16%. In its most recent quarter, Chevron saw its quarterly revenue rise from $36.1 billion to a staggering $65.4 billion on a year-on-year basis. Net income during this time also climbed phenomenally, from $3 billion to over $11 billion. The management had strategically capitalized on these gains, which made CVX even more valuable. For instance, the balance sheet was significantly strengthened, causing the net debt ratio fall to below 15%. Also, management has increased annual share buyback guidance to $15 billion for the year, which is a delight to shareholders. With so many strengths, the cherry on top for this winning stock is its status as a dividend aristocrat, with its over 34-year history of consistent payouts, and a yield of a decent 3.3%. It is no surprise that CVX has delivered massive gains to Warren Buffett, who continues to remain highly optimistic about its future potential. Next up, we take a look at the booming Latin American fintech company, NU Holdings, which trades by the ticker NU. During the year, Warren Buffett sold stakes in both fintech giants, MasterCard and Visa, to a significant degree. What is most interesting is that, during this same time, he invested over $1 billion in NU Holdings, the largest fintech bank in Brazil, and in the wider Latin American region. There are a number of factors that make NU such a perfect fit. The region has a significant portion of the population that is unbanked, coupled with extremely high mobile usage. Factoring in the positive government regulatory environment, the company is a perfect recipe for a winning investment. In its most recent quarter, its Brazilian user base grew by 51% year-over-year, to a record high of more than 65 million. These figures point out that over a third of the Brazilian adult population are new banking customers, suggesting an extremely strong penetration. During the quarter, NU succeeded in pushing its revenue for the period to $1.2 billion, translating to growth of a whopping 244%. The value of NU is evident, considering such booming progress and potential, coupled with the fact that its stock has fallen by almost 60% since the start of the year. The stock is an inevitable winner and one that cannot be ignored. The final stock on our list is the Buffett-backed Chinese EV giant, BYD Company Ltd, which trades by the ticker BYD. Berkshire Hathaway has been a long-term investor in BYD, and its stake in it has ballooned 35 times in magnitude, up to the present date. Typically, investors consider Tesla Incorporated as a suitable investment to gain exposure to the booming EV phenomenon. However, Warren Buffett knows very well that BYD is a far more enticing opportunity. Despite Tesla being the largest player in the game, it is crushed by BYD in one crucial area, which is growth. BYD is growing at a rocket pace, given its positioning in China, which is the world's prime market for EV growth. Official statistics show that August brought in a record number of EV and hybrid electric car sales, amounting to over 625,000. In terms of annualized figures, this stands at 7 million, which is a third of total vehicle sales in the country. It is precisely due to this booming opportunity that Tesla's largest production facility is based in China. However, BYD is far better integrated into the Chinese EV value chain to grow along this trajectory. Not only does BYD develop high-quality EVs, but is also a EV battery system supplier to other manufacturers, including Tesla itself. For August alone, Tesla's sales in China grew by 74% year-on-year, whereas the growth for BYD was an incredible 185%. BYD projects 4 million EV sales for the next year, which will inevitably place it on the EV throne. There is no better winning EV stock than BYD, as Warren Buffett has accurately perceived. That's all from us in this video. We hope the insight we aimed to deliver has proven valuable to you, and would allow you to ensure your portfolio is well suited for a winning strategy. We would love to hear your feedback about our list in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to check out our website, stockstelegraph.com.